HRB. So this is H&R Block. H&R Block had a very active month as the investor reached to the company fiscal 2026 results and its outlook for the fiscal 2027. The biggest news came on August 11 when H&R Block reported its full fiscal 2026 results. Revenue increased 4.9% to $3.95 billion. The net income from continued operations increased 20%, nearly 21% to $736 million. Adjusted earnings per share increased around 14%. The company also generated $138 million in operating cash flow, which was 23% higher than the previous year. The earnings report also showed that H&R Block continued to return significant cash to shareholders. During fiscal 2026, the company returned $113 million through dividends and share repurchases. It repurchased about 10 million shares, which represented nearly 8% of shares outstanding. Another important announcement was the dividend increase. H&R Block raised its quarterly dividends by 10%. The company said this represents its 9th consecutive annual dividend increase. The company also gave its fiscal 2027 outlook. Management expects revenue between $4 billion and $4.16 billion. The adjusted earnings per share is expected to be between $6 and $6.25. As we can see here, we are having growth, we are having improvement. And there was one important detail inside the earnings number. The fiscal 2026 earnings benefited from a $84 million one-time non-cash tax benefit related to the resolution of an IRS examination. This adds $0.75 to earning per share. Because of this, investors should look at the adjusted results as well as the reported results when studying the company. The market reaction was strong after the earnings announcement. The company results were followed by heavy trading activity and a large one-day move. Since then, the stock has moved lower from its August 18 high before recovering over several sessions. The recent market data show 4 consecutive sessions of gain through August 21. For investors, the important story is not simply the short-term movement. The numbers show revenue growth, stronger operational cash flow, higher adjusted earnings, and continued share repurchase. At the same time, long-term debt increased during fiscal 2026, and financial services revenue declined slightly, so this area remains worth watching. The company is now entering the fiscal 2027 with management expecting another year of revenue and adjusted earnings growth. The next important test will be whether H&R Block can deliver the outlook it has provided.